Okay, welcome everyone. Good morning, and welcome to everyone that's online to all our shareholders in Jamaica, Trinidad, and all over the world. Thank you for coming this morning. I will now introduce the Corporate Secretary to read the notice of the meeting.
Thank you, Chairman. Notice is hereby given that the first annual general meeting of A.S. Brydens and Sons Holdings Limited will be held on 16th of July, 2024, virtually at 10 a.m. Jamaican time, 11 a.m. Trinidad and Tobago time, for the purpose of transacting the following business. 1. To receive the audited accounts and the reports of the directors and auditors. To consider, and if thought fit, pass the following resolution: that the director's report, the auditor's report, and the audited accounts for the year ended 31st December 2023 be and are hereby adopted. 2. To fix the remuneration of directors. To consider, and if thought fit, pass the following resolution: that the amount shown in the audited accounts as directors' remuneration for the year ended 31st December 2023 be and is hereby approved. To appoint auditors and authorize the directors to fix the remuneration of the auditors. To consider, and if thought fit, pass the following resolutions: that PricewaterhouseCoopers, having indicated their willingness to continue in office as auditors, be reappointed auditors for the ensuing year. That the directors be authorized to agree the remuneration of the auditors. 4. Special business. To approve and ratify the amendment of the company's bylaws approved by the directors on 6th of May 2024, which permits shareholders' meetings to be held using electronic means, such means to include video conference, by which shareholders not present in the same physical location may simultaneously and instantaneously hear and communicate with each other. Shareholders seeking further clarification of amendments can contact the company at gcc@brydenst.com. 5. To transact any other business which may be properly transacted at an annual general meeting. The notice is dated 26th of May 2024 and signed by me, Bernadette Sammy, Corporate Secretary. For this meeting, no apologies were received. The list of proxies received are as follows: for Musson Investments Limited, in favor of P.B. Scott or Melanie Subrati. For Sepra Limited, in favor of P.B. Scott or Richard Pandui. Thank you.
Thank you very much. I move that the director's report, as in the annual report, be taken as read. Can I have a second? Melanie Subrati, thank you. Mr. Pandui, the CEO, will give his update on the company.
Thank you, Chairman. Ladies and gentlemen, esteemed shareholders, valued partners, members of the media, my colleagues from Trinidad and Tobago, Guyana, Barbados, St. Vincent, St. Lucia, and Jamaica, I greet you well. Today is both exciting and intimidating. Exciting because our first AGM, and intimidating because I'm reporting on our early days stewardship, building on 100 years of high-performance legacy. With the privilege of acquiring A.S. Brydens and Sons Limited came the expectation that this was a baton change to propel the Brydens Group to higher heights. Under the expert guidance of the Board of Directors, led by Chairman P.B. Scott, your management has embraced the expectation, and I'm honored to report the company has delivered strong results in 2023 compared to 2022. Revenue increased by 104%, operating profit grew 106%, and profit before taxation increased by 97%. However, this has to be taken into the context that in 2023, we had a full year of results, and this was being compared against 7 months in 2022, based on the date of acquisition. However, even when we normalize and compare like for like, 2023 was a better year. These results are now history, and so I prefer to spend a few minutes to tell you how we're going to drive growth and create value over the next 5 years. We'll do this by relentless execution of our key priorities, which are, 1, building out a regional platform. This is well on the way. As of now, A.S. Brydens owns 55% of Stansfield Scott Barbados Limited, acquired in February 2024. Brydens Group owns 44.8% of Caribbean Producers Jamaica Limited, a move made last week. Its subsidiary, Bryden Pie, owns 51% of Bryden Pie Guyana and 49% of Armstrong Healthcare in Barbados. Another separate subsidiary, Micron Holding, owns 75% of Facet Trading Limited in St. Vincent. And another subsidiary, FT Farfan, owns 75% of Ibis Construction Equipment in Guyana. And I dare say every year this list will increase. Priority number 2, investing in technology to drive profitability, productivity, and improve customer service level. 3, completing our warehouse and logistics center that will not only streamline our distribution in Trinidad and Tobago, but also serves as a logistic hub for export thrust. 4, massively expanding our innovation pipeline and brand investment. 5, focusing on our human capital, not only to attract new talent, but also to ensure that we excite and retain our existing staff. And 6, strengthening existing partnerships and onboarding new principals. We want to be the partner of choice for this region. All of the above will allow us to be more resilient, more forward-thinking, and to continue to be relevant to our consumers of today and tomorrow. In terms of values to you, our shareholders, the shares listed on November 10th at 22 Jamaican dollars 50 cents and ended the year at $33.11, a 47% appreciation. And at end of trading yesterday, it was $40.43. 2 dividends payments were made in 2023, each for 29 Jamaican cents per share. And this month, July, shareholders received another dividend payout of 30 cents per share. Thank you for the thunderous virtual applause. Long may the share price appreciation and dividend payout continue. While our mandate is to create value for our shareholders, we're also deeply aware of our responsibility to prioritize sustainability, social responsibility, and philanthropy, recognizing our impact on the communities in which we serve. In this regard, we have begun the work to establish the Brydens Foundation, which we expect to be completed this year. We look to the future with confidence, despite the challenges and uncertainties. Why? We have a solid strategy. We have an experienced board of directors. We have a chairman who has created a homegrown and multinational firm that operates in over 25 countries. And more importantly, we have over 2,000 team members that are working every day to deliver amazing products and experiences to our customers. Shareholders, we value your trust and look forward to your ongoing support as we create a legacy that will positively impact our families, our communities, and our region. Thank you.
Thank you, Richard. I will now invite Mr. Paul Williams of PricewaterhouseCoopers to read the auditor's report. Mr. Williams.
Thank you, Chairman. Good morning. Independence Auditor's Report to the shareholders of A.S. Bryden and Sons Holding Limited. Report on the audit of the consolidated financial statement. In our opinion, the consolidated financial statement present fairly in all material respect the consolidated financial position of A.S. Bryden and Sons Holding Limited, the company, and the subsidiary together, the group, as of 31st December 2023, and their consolidated financial performance and their consolidated cash flow for the year then ended in accordance with IFRS accounting standards. What we have audited. The group consolidated financial statement comprise the consolidated statement of financial position as of 31st December 2023, the consolidated comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flow for the year then ended, and the notes to the consolidated financial statement comprising material accounting policy information and other explanatory information. Basis for opinion. We've conducted our audit in accordance with International Standard on Auditing, ISAs. Our responsibility under those standards are further described in the auditor's responsibilities for the audit of the consolidated financial statement section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with International Code of Ethics for Professional Accountants, including International Independent Standard issued by the International Ethics Standard Board of Accountants, the IESBA code. We have fulfilled our ethical responsibility in accordance with the said code. Our audit approach. Overview of our approach. With respect to materiality, overall group materiality was computed at TT 25.6 million, which represents 1% of revenue. The group scoping. The group audit include the full scope audits of 4 subsidiaries, which are deemed to be individual financially significant components, all located in Trinidad and Tobago. Our audit of specific account balances in 2 other components and limited procedure in other entities. Key audit matters. We have 2 key audit matters: goodwill impairment, valuation of post-employment benefit assets. Audit scope. As part of designing our audit, we determine the materiality and assess the risk of material misstatement in the consolidated financial statement. In particular, we consider where management made subjective judgment, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all our audits, we also address the risk of management override of internal controls, including, among other matters, consideration of whether there was evidence of bias that represent the risk of material misstatement due to fraud. How we have tailored our audit scope. We tailor the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statement as a whole, taking into account the structure of the group, the accounting processes and controls, and the industry in which the group operates. The following components were deemed to be individually financially significant and were subject to full scope of audit. A.S. Brydens and Sons Trinidad Limited, Brydens PI Limited, FT Farfan Limited, and Micon Marketing Limited. The group audit engagement team was the auditor for these 4 components, and the 2 components subject to an audit of specific account balances. Other components were subject of limited audit approach. Our audit approach continue. Materiality. Based on our professional judgment, we determine certain quantitative threshold for materiality, including the overall group materiality for the consolidated financial statement as a whole, as set out in the table below. Those together with qualitative considerations help us determine the scope of our audit and the nature and timing and the extent of our audit procedures, and to evaluate the effective misstatement both individually and in aggregate on the consolidated financial statement as a whole. The overall group materiality was TT $25.6 million. It was determined it represents 1% of revenue. The rationale for the materiality benchmark applied. We chose revenue as a benchmark because in our view, it is the most suitable benchmark against which performance of the group is measured by users and is generally accepted benchmark. We chose 1%, which is within a range of acceptable benchmark thresholds. We agree with those charged with governance that we would report to them misstatement identified during our audit above TT $1.2 million as well as misstatement below that amount, in our view, warranted reporting for qualitative reasons. Key audit matters. Key audit matters are those matters that, in our professional judgment, where most of the significance in our audit of the consolidated financial statement of the current period. These matters were addressed in the context of our audit of the consolidated financial statement as a whole and informing our opinion thereon. And we do not provide separate opinion on these matters. The first key audit matter, goodwill impairment. Refer to notes 2E, 4, and 14 to the consolidated financial statement for disclosure of related accounting policies and balances. As of 31st December 2023, the group carries significant amount of goodwill amounting to TT $68 million. In line with IAS 36, impairment of assets, management perform an annual impairment assessment of goodwill. The recoverable amount of each cash generating unit, the CGU, is calculated as the higher of value in use, VIU, and the fair value less cost of disposal. Management determines the recoverable amount by reference to the value in use, which was derived using discounted expected cash flow approach where management make significant judgment on certain key inputs and assumptions, including discount rate and growth rate. We focus on this area because of the significant level of judgment required in arriving at the key assumptions using management impairment assessment. How we address this key audit matter. Our approach to addressing the matter with the assistance of our internal expert involves the following procedure amongst others. Obtain an understanding of the method used by management to perform its goodwill impairment assessment and assess whether they are in compliance with IAS 36. We recalculated the weighted average cost of capital, the WACC, used to discount the expected cash flow and evaluate those rates against observable market-based input and our knowledge of the economic environment. We also assess the assumptions, including the growth rate, by reference to historical performance of the CGU and relevant external economic industry data. We tested the mathematical accuracy of the management impairment calculation, and we compare management future cash flow forecasts using the impairment calculation to those approved by the board of directors as part of the annual budgeting process and strategic plans. Based on the results of our procedure performed, management goodwill impairment assessment conclusion was not unreasonable. The second key audit matter relates to valuation of post-employment benefit assets. Refer to notes 2N and 16 to the consolidated financial statement for disclosure of related accounting policies and balances. The group sponsor a defined benefit pension plan. The 31st December 2023, the group reported on the consolidated statement of financial position and net post-employment benefit assets of TT 27.2 million, which represent 1.2% of total assets, comprising planned asset value at TT $261 million, and an obligation of TT 233.8 million. The valuation of the net post-employment benefit assets requires significant level of judgment and technical expertise in determining appropriate assumptions. Changes in key assumptions could have a material impact on the calculation of the net pension benefit, including the discount rate, mortality rates, and salary increases. Management utilized an independent external actuary to perform certain calculations with respect to the estimated obligations. The pension asset consists of financial investment held at fair value, which are based on a range of inputs. While many of the input can be obtained from reliable, available, observable market prices and rates, certain securities are based on model prices as observable market data is limited. In these instances, management is required to make significant judgment due to the complexity of the valuation model estimate, resulting in high estimation uncertainty risk. We focus our audit effort in this area due to the degree of estimation of uncertainty involved in determining the valuation of the post-employment benefit plan asset and the defined benefit obligation of the post-employment benefit plan. Our audits address the key audit matter. Our approach in addressing this matter, with the assistance of our internal actuarial expert, involved the following procedures, among others. We assess the independence and competence of the actuaries used by management to calculate the pension obligation. We tested the key assumptions for the defined benefit pension obligation for the current period as follows. We compared the discount rate used by management to the yield of a Government of Trinidad and Tobago bond of similar tenure. We also compared the mortality rate to relevant publicly available statistics for Trinidad and Tobago. On a sample basis, we tested the completeness, accuracy of the employee data using the actual calculation by comparing it to the personnel file. We also compare salary increases to historical increases, taking into account the current economic climate, as well as terms specific to the existing trade union arrangement. For investment, which we value using valuation model, we evaluated the assumptions, methodology, and models used by the group. We tested the significant input relating to yield, prices, and valuation on a sample basis to external sources where available and compared to similar transactions in the marketplace, and recalculated the valuation for a sample of model security. Based on the results of the procedures performed, the valuation of the post-employment benefit assets was not unreasonable. Other information. Management is responsible for other information. The other information comprises the A.S. Brydens and Sons Holding Limited Annual Report 2023, but does not include the consolidated statement and our audit report thereon, which is expected to be made available to us after date of the audit report. Our opinion on the consolidated financial statement does not cover other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated financial statement, our responsibility is to read the other information, identify above when it becomes available, and in so doing, consider whether other information is materially inconsistent with the consolidated financial statement or our knowledge obtained in the audit, or otherwise appear to be materially misstated. When we read the A.S. Brydens and Sons Holding Limited Annual Report 2023, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the consolidated financial statement. Management is responsible for the preparation and fair presentation of the consolidated financial statement in accordance with IFRS accounting standards, and for such internal as management determine is necessary to enable the preparation of the consolidated financial statement that are free from material misstatement, whether due to fraud or error. In preparing the consolidated financial statement, management is responsible for assessing the group's ability to continue as a going concern, disclosing as applicable matters relating to going concern, and using the going concern basis of accounting unless management either intend to liquidate the group or cease operation, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group financial reporting process. Auditor's responsibility for the audit of the consolidated financial statement. Our objectives are to obtain reasonable assurance about whether the consolidated financial statement as a whole are free from material misstatement, whether due to fraud or error, and to use the auditor's report that include in our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatement can arise from fraud or error and are considered material if individually or in aggregate, they could reasonably be expected to influence the economic decision of users taken on the basis of these consolidated financial statements. As part of an audit in accordance with ISA, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatement of the consolidated financial statement, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulted from error, as fraud may involve collusion, forgery, intentional omission, misrepresentation, or the override of internal controls. We also obtain an understanding of internal control relevant to the audit to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group internal controls. We evaluated the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosure by management. Conclude on the appropriateness of management use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to event or condition that may cast doubt on the group ability to continue as a going concern. If we conclude that a material uncertainty exists, we're required to draw attention in our audit report to the related disclosures in the consolidated financial statement, or in such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our audit report. However, future events or conditions may cause the group to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the consolidated financial statement, including the disclosure, and whether the consolidated financial statement represent the underlying transaction and result and events in a manner that achieve fair presentation. Obtain sufficient appropriate audit evidence regarding the financial information of the entity or the business activities within the group to express an opinion on the consolidated financial statement. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal controls that we identified during our audit. We also provide those charged with governance the statement that we have complied with the relevant ethical requirement regarding independence, and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence, and where applicable, action taken to eliminate threat or safeguard apply. For the matters communicated with those charged with governance, we determined those matters that were of most significant in the audit of the consolidated financial statement of the current period and are thereon the key audit matters. We describe these matters in our audit opinion unless law or regulation precludes public disclosure about the matter, or when, in extremely rare circumstances, we determine that the matter should not be communicated in our report because the adverse consequence of doing so would reasonably be expected to outweigh the public interest benefit of such communication. The engaging partner on the audit resulted in this independent audit report is Roshni Sinaik from PwC Trinidad, signed PricewaterhouseCoopers, Port of Spain, Trinidad, West Indies, 2nd of April, 2024. Thank you.
Thank you very much, Mr. Williams. The director's report, the auditor's report, and the financial statements are now open for discussion. I believe because we are online, we may have some questions online. Damien? Do we have any questions? If we don't have any questions, Mr. Rose, you have a question? Okay, you, Damien, do you have any question? What is, okay, could you say who the name of the person is who's asked the question, please? And then we can,
The person post their name. So we'll get the name afterwards.
okay. So the question is, what is the,
Anticipated impact of the CPJ acquisition on the Brydens Group.
well, it is definitely going to have a significant impact on the group. First of all, what it does is it delivers to AS Brydens a, is that Damien? Oh, okay, you're doing that. It delivers to AS Brydens an arm in Jamaica with regard to premium beverages. It also delivers to AS Brydens a hotel and restaurant food service business, which we don't have in the rest of the Caribbean or nor in Jamaica. And that will allow us the opportunity to build such a business in, as you may know, we are building brand new distribution facilities in Trinidad as well as Guyana. And as a result of that, we will be incorporating the infrastructure to do frozen and chilled products in those businesses. And hopefully we can leverage the relationships that we have at CPJ to grow that business outside of Jamaica.
Which is also consistent with the approach of Stansfield Scott acquisition in February.
Right.
Which is, it's between Stansfield Scott in Barbados and CPJ in Jamaica. It's very consistent. Both premium beverages, both up to the hospitality sector, which is consistent with our regional strategy.
Yeah.
And now forms one of the key pillars that we're building out.
I guess I can ask questions in the meantime. Morning, Sir Scott.
Morning.
David, a shareholder. So first question, you can hear me, right, Richard?
Yeah.
So I missed part of the early presentation, but what's the status in terms of the cross listing on the TTSC? Could you give some context as to the delays related to the TTSEC?
Yeah, so we're working through that. And we're hoping that that will be sorted out by the end of the year.
So it's really just a delay on the TTSEC side then?
Sorry, David?
It's really a delay on the TTSEC side then?
Yes, we're working with them to be able to do that.
Understood. Then my next question, is with respect to the most recent set of acquisitions. So with respect to CPJ in Jamaica, was that all funded by debt? That's the first question.
No, we have existing facilities, which of course is debt. But obviously all the facilities, are available to us, but we had cash on hand as well as facilities that we drew down on.
Understood. And then the subsequent question there is it that considering the constraints that exist in Trinidad, that AS Brydens will be looking more so towards acquiring assets that can generate strong US dollar hard currency?
The question you're asking,
In terms of looking at other potential acquisitions, in terms of looking at other potential deals that would generate strong USD hard currency earnings, that's really the question.
Right.
No, so the question is of the future acquisitions. I'm saying it was going to more focus towards that in terms of looking for acquisitions that will lead to strong USD or accessible.
Are you asking whether we would have a preference to acquiring businesses in countries that have easily convertible currency?
In a sense, yeah.
There's a big plus with regard to CPJ because it definitely balances AS Brydens' business in that it will be earning US dollars in CPJ, which helps AS Brydens. However, when we look at acquiring businesses, it's not the only thing that we're looking for is earning US dollars. I mean, we look at the growth potential of the business. And in the case of CBJ, we believe that there's going to be a significant amount of room stock added to the Jamaican infrastructure. And therefore, tourism will continue to grow in Jamaica. And CBJ is the leading supplier to that trade. And we have, in our capacity as a distributor at Facey Commodity, been trying to get into that business. And that business is not a business that you can just walk in and have product that can just knock on a door and start to move in there. If it was, we would already be in that business because we have warehousing, we have people, we have systems, and we're in the distribution business. It has a lot of idiosyncrasies, a lot of value added, and you need the infrastructure and the type of individuals and people to be able to service that trade, and that's what that business has. So when we're looking at acquisitions, it's not just about foreign exchange, it's about many different things: price, how it's funded, whether it's primarily something that's in our strategy to enhance what our business wants to be in a couple of years' time.
Thanks. So, going back to our earlier query, in a sense, I recall, that AS Brydens intends to take control of CPG at a later date in the future.
Yes.
Will that later control result in, the intention to change CPJ's year into December 31 and change auditors?
Well, I think that's a detailed question that's not so relevant to the accounts of AS Brydens. We will naturally, in the future, want to change anything that's associated with us to the same accounting calendar that we're in. With regard to the change of auditors, that is a separate discussion. As it is right now, CPJ is a publicly listed company with a board, of which I'm not even a member, that requires to make their own decisions at the time when they are to make decisions. That is not a decision that would be properly discussed at an AGM of another company that just so happens to own 44% of that company.
That's fine. So, I believe my next question is really for Richard. You've been spending effectively the last 2 years in Trinidad. I'm sure it's been very fun.
But you do this all the time, and I say this to you: you don't address.
Apologies.
And it's third meeting. I'm hoping going forward you will not be doing that.
Apologies, Chair.
Okay.
Can I address a question towards? Sir?
No, you can't. You address the questions to myself, and I determine how we answer the questions.
Fine. So, Richard has basically spent the last 2 years in Trinidad, in a sense, getting integrated into the AS Brydens framework in a sense. So, the better question is, apart from, just growing the business in Trinidad, how has that, overall integration strategy worked in terms of further back synergies towards separate, for example?
Because Richard has been in Trinidad, or?
No, so he's in Trinidad, overseeing the...
Right. Richard is the
operation.
CEO of the Separate Group, and by extension, the CEO of AS Brydens Group, yes.
So, he's looking at the backward synergies, if any has been created, in a sense.
Well, we're always looking for synergies. We're always looking to try and improve the operations. And AS Brydens is a platform in which naturally we can produce product from our factories here in Jamaica and sell to AS Brydens. Absolutely. Are you asking me how developed are we in that, or?
Well, it's one perspective, because I recall that, Separate would have been in Trinidad already from a Trinidadian subsidiary prior to the acquisition, and earlier you just mentioned the potential to export to Trinidad, or in this case to AS Brydens. So it's really about those potential backward synergies that have been created subsequent to the acquisition.
I don't think we did not have a subsidiary in Trinidad prior to the AS Brydens acquisition in Seprod, but Mawson has had many subsidiaries so it's separate again. I think that if you look at the results of Seprod, when you were here yesterday, I think you'll be aware that there are significant benefits and synergies that have rolled up into Seprod's accounts.
So just to clarify there, so is it that you were mentioning earlier that Seprod has exported more products to the Trinidad market and used AS Brydens as a platform?
Seprod has exported more products to the Trinidadian market. AS Brydens is one of many customers in the market. We have significant exports with contract manufacturing for multinationals that comes out of Jamaica that ends up with other distributors throughout the whole Caribbean.
And one last two questions are why?
Yeah, David, write down your questions because we have a format. We're going to go to questions online and we'll come back to you afterwards. Thank you. Damien?
Okay, thank you. So Emmanuel Gittins is asking, can you talk a bit about the drive to keep acquiring more companies as opposed to investing in the current companies that form the group?
Yeah, so I think that might be a bit of a misconception because we're investing significant amounts of money in the existing businesses. I mean, we've only really acquired Stanfield Scott in Barbados, which was a significant investment. And obviously, we've made this investment in CPJ. AS Brydens has been investing in a brand new distribution center in Trinidad, as well as a brand new facility in Ghana, which is being built this year. So significant investment has been made and is being made. Richard, do you have any comments on?
What I'd say is that in all our businesses, we're investing in our technology. And we speak about that. I mean, a key pillar that will drive us going forward is the application of technology. When we speak to all our partners, the need for data and for seamless integration of the business, because we're an extension. Chairman keeps saying we're an extension of our partners. So we're making a lot of investments. So sometimes investment is not upfront and center where you can physically see like a distribution center or new trucks, but there's a lot of background work being done in that. I mean, we also talk about investment in our people. We're making a lot of investment there. So I mean, everything we do is tied to one strategy of integrating. So I mean, it shouldn't be seen as, investment outside of the company as opposed to the existing business, all integrated to lead to an outcome to create value.
Thank you. Dan Ives is asking, will ASBH be consolidating its logistics operations after subsuming CPJ? And if yes,
Sorry, could you just repeat that? It wasn't very clear when it was.
will ASBH be consolidating its logistics operations after subsuming CPJ?
Sorry, well, I cannot understand what you're saying. What is he saying?
Right.
We consolidate its logistics operations after subsuming.
Well, I mean, CPJ's logistics operations are in Jamaica, and ASB's operations are in Trinidad. So the consolidation there is obviously very limited,
Right.
non-existent.
Yep. And Adam Rafoul is asking, when can we expect an IPO on a Trinidad and Tobago Stock Exchange?
Yeah, it's a good question. I think we answered that earlier. It will be a listing. It won't be an IPO or an APO. It'll be effectively a listing by introduction because we're not looking to raise any more money. But we're hoping to get that done as quickly as possible, hopefully by the end of the year.
And he's again asking, does ASB have any plans to increase manufacturing of food products in TNT?
Absolutely. We're looking at building out our facilities in Trinidad. We do have a business called Genetics, which we're going to be upgrading and reinvesting, increasing capacity of it. And we've been looking at many opportunities in Trinidad for manufacturing as well.
Thank you, Mr. Chairman. Thanks, team. That's all we have online.
Okay. Richard, do you have anything on that? David, have you got any questions that you want to?
Where was the AS Brydens, acquisition executed? It was done back in 2022, meaning the business amalgamation between ASB Holdings and the predecessor limited.
What is the question?
No, why was the acquisition done in that way?
Why? Because we acquired a business and we funded that business with a vehicle, and then we amalgamated the two together. I can go over that technically with you, how that's done, but that was the methodology we chose to acquire the business. And
Fine. Probably last two questions. So you have the Guyanese operations in the construction equipment down there. What's the outlook, and growth opportunities in Guyana for the Brydens Group then?
well, Guyana is growing very materially. The equipment business last year grew in excess of 40%. We expect it to grow this year again by another 40%. And I don't think that can continue in perpetuity. I mean, but Guyana is essentially going through a complete transformation, and that transformation will continue. I don't have a magic sort of ball that can tell me what it's going to look like in 5 years' time. But what I can say, I think fairly confidently, is that it's going to look differently from today. And in order for it to look differently for today, there's going to be a lot more construction. And if there's going to be a lot more construction, people are going to need a lot more construction equipment. So we are very optimistic. We're fairly bullish. We're putting resources in place and we're excited to be there. On the food side, we're building a brand new distribution facility, and the pharma side. And that business is constrained, obviously, by the infrastructure that we have available to us right now. As we build that out, we expect that to continue to grow and develop.
Sure. And now with AS Brydens owning 100% of Brydens PI, just for context, Brydens PI only manufactures pharmaceutical products in the Trinidadian market.
Brydens Pie is a distribution company. It doesn't do any manufacturing, but Genetics is a manufacturing company based in Trinidad that exports throughout the Caribbean.
They export to Jamaica as well?
Yes.
You have any reference brands that you could mention?
Salve, Genetics, Salve disinfectant. It's on the shelf. We can show you some brands afterwards. Any further questions?
Just one final question. How has the Micon marketing acquisition fundamentally contributed positively towards AS Brydens' overall earnings? Because since it's a new wholly owned subsidiary now, it's no longer a standalone separate figure that can be determined.
Sorry, could you just say the last sentence? I'm not really hearing you very clearly.
Micon Marketing is a wholly owned subsidiary, so there's no ability for one to glance into that business operation. But how is that business growing or contributing towards the overall AS Brydens Group?
Yeah, Micon is a different type of business to AS Brydens in that it deals with a lot of down the trade distribution with trucks and straight down to small shops, etc. So it delivers a lot of capability to AS Brydens. In terms of Micon's performance, I hope this year we're going to be close to budget. but you know, nothing's linear, and month to month things change. But I expect Micron is managed by exceptional people. Gerard Conyers, the CEO, Adam, is chaired by Michael Conyers. Extremely, you'd be hard pressed to find more experienced people in the distribution trade than them. And so, you know, we're fairly confident that we will be close to budget.
How did Micron perform last year in terms of growth?
Sorry?
How did Micron perform last year in terms of growth?
In terms of growth last year, I think it was pretty much on budget with regard to sales last year. Yeah.
Any quantification in terms of increase or decrease?
Sorry?
Any quantification in terms of increase or decrease in terms of a percentage figure of growth?
I don't think it, I mean, I think it pretty much was right on budget. It was solidly on the numbers at the end of December, which would have been a small growth, if anything, but it wasn't.
Thanks.
No further questions? Okay, if there are no further questions, thank you. I move that the director's report, the auditor's report, and the audited account showing the position of the company's affairs as of December 31st, 2023, now and before the meeting be and are hereby approved and adopted. Can someone please second the motion? Thank you, Mr. Dodd. We have votes online. Yep, it has been approved. Remuneration of the directors. I move that the amount shown in the accounts for the year ended December 31st, 2023 for directors' fees be and is hereby approved. Will somebody please second the motion? Melanie Sabrati, thank you very much. Can we now have a vote? I think it was a vote online. Yep, it's approved. Thank you very much. Appointment and remuneration of auditors. PricewaterhouseCoopers have indicated their willingness to continue in office as auditors. Thank you very much. I move that PricewaterhouseCoopers be reappointed auditors for the ensuing year. Can I have a second, please? Thank you. That's David Rose. I now move that the directors be authorized to fix and agree the remuneration of the auditors. Can I have a second, please? David Rose, thank you. And can we have a vote? Okay, that has passed. Thank you. Special business. I move that the amendment of the company bylaws, which was approved by the directors on May 6, 2024, to permit shareholders' meetings to be held using electronic means, such electronic means to include video conference by which shareholders not present in the same physical location may simultaneously and instantaneously hear and communicate with each other, be and is hereby ratified and approved. Can somebody please second the motion? David Rose. Can the vote on the motion? Thank you. Is there any other business that can be discussed? If there are, any questions, Damien, online? If we went online, I would invite everyone for refreshments afterwards, but we are online. So thank you very much for attending the meeting. And given that there is no further business, I will declare the meeting adjourned. Thank you. Have a good day. Bye-bye.